So behind every helicopter deal in the market, there is usually a story to be told. And light helicopter might seem small. However, for many, it's quite the foundation for much bigger things. And with this, I'd like to welcome you to our panel today. Do the best deal come in smaller packages? The next 20 minutes or so, we'll discuss it. We'll look into opportunities, the risks in this light helicopter side of the business. And more on that, well, heavy helicopters tend to attract most of the news and the headlines. Light helicopters like to be operator-led ambition and with opportunity and in the market. And with me today, I have Samir from Aerius Group, who's someone who's been very close to these transactions and knows very well how to put the story and the numbers align. And thank you, Samir, for joining in the panel today. And would you like to introduce yourself and what you do?
Thank you, Rami. Good afternoon, everybody. Firstly, I think important to develop some contextual understanding, at least on the basis of my responses going forward for the next 20 minutes. Aerius Leasing, as you may have heard this yesterday, was officially launched recently, but Aerius Group started about 7 months ago. And prior to which, I was with Bell Helicopter as the Managing Director for Asia Pacific, the Middle East and Africa. And before that, with Textron Financial, managing Middle East, Asia Pacific for them. And prior to that, Cessna Aircraft Company. So of the 25 years, from a context standpoint, truly it's just been OEM and captive lender perspective. So the last 7 months, I've gained a lot of understanding in the open market, developing formidable relationships with Leonardo, Airbus, and the other OEMs that I didn't have the privilege of doing when I was at Bell, but more importantly, truly understanding the business at large when it comes to leasing smaller helicopters. And of course, my esteemed partner, Chris Lloyd, if I may briefly introduce him as well, has for the last 6 years been with LCI, managing the Asia Pacific portfolio. Prior to that, decades with Lloyd Aviation and Lloyd Helicopters on the trading side. But with that, Aerius Leasing is very intimately involved in looking at leasing across a broader spectrum. And we've come to understand that we want to be operator-focused and not asset-focused. So as a brief introduction to where we're heading in the future roadmap for our business, I think that encapsulates it. We really want to be customer and operator-focused.
Thank you. We'll start on looking just quickly on the slide. And we have seen in the recent years, deliveries are relatively stable. They're fluctuating in the 400, 600 range. Maybe last year we saw slightly less helicopters coming into the market. But it does show that there is deliveries are in good, coming in good numbers. And they're especially going into areas such as the North America, Europe, and Asia. So this is in reference to light helicopters, which we'll say it's the helicopters that are under the 4 tons of weight. And although this sector does have one of the largest helicopter deliveries, still has one of the lowest owned to lease ratios across the weight categories, different weight categories. So on this, what do you think this segment, why do you think this segment remains underrepresented in the leasing portfolios and even with this volume that's coming in?
Thanks, Rami. A few reasons come to mind. Firstly, if we separate helicopters in 2 distinct categories, one Part 27 and Part 29, and also single engine and twin engine, and looking across those 4 segregated categories, you would find that single engine helicopters, by and large, are simply more affordable. Financing is typical. Local market debt is easier to get. Many people want to retain their own residual value in the aircraft, and leasing is usually not something that they want to do, usually. Moving on to Something larger than that, we're talking about 135s, 429s, 109s in the Part 27 category as a twin engine. Those contracts don't pay as much as the larger aircraft. So from a leasing perspective, even though a percentage rate return on your equity and your debt may match that of larger aircraft, the dollar returns don't justify the transactional fixed cost at the start of it. So I believe that has something to do with it. But more than that, what we have seen time and time again is these assets that we find in the lower asset classes, like the 407s, the 119s, the 130s, the 125s, is that these are so easily reconfigurable. Leasing companies have yet to realize the vision of that, yes, but owner and operators understand that very well too. They're quick change artists, and they do that really well when they remain with the operator rather than the lessor.
Yeah, I mean, what stands to me in this corner of the helicopter business, the transactions with some of these operators tend to be not as anonymous or not at a large scale. They're more rather smaller and more personalized to these operators. And it's more driven by the people with a mission and a plan that they have. So would you agree that the success of these transactions depends more on the operator rather than the aircrafts?
Yes. See, this is a bit of a soapbox discussion for me, because from a standpoint of serving the needs of a customer, there cannot be anything more vital than that. I think we can all agree, all of us, okay, maybe most of us, if not all of us, have had humble beginnings. Large operators today were once fledgling organizations, and getting into the helicopter business should be the responsibility of every one of us to encourage. So it is absolutely about the operator. It's absolutely about looking at people and understanding what their dreams and passions are. Aviation is inherently a passion-driven business. But we have become so entrenched in the tenets of globalization that we have forgotten that our customers do not care where else we do business. They care if we do business where they live. So if we are going to be globalized, we should think about the ability to raise the tide so that all boats are raised as well. And working with operators in jurisdictions that need helicopters, that saves lives, that manage contracts and raise communities.
Yeah, I mean, we also see operators, they start always with like one helicopter or two, then they start to grow into a 5 and 10. It's like more of like a leap going into forward. But their growth isn't really accidental. It's more deliberately calculated. And it's not just about expansion as well. It's about building durability and a business credibility. And moving on the second slide we have on here. Do I have to click something? So looking in here on the slides, like it is more about the helicopters in the under 4-ton categories. These light helicopters are very active in almost all sectors in the business, utility and VIP passenger transport, or even like police and government, EMS and firefighting in recent years, wind farm to an extension as well. And we see models like the H125, the Bell 505, Robinson, and the 145 are also taking some of the and dominating the deliveries. But these, as seen, like these assets don't sit idle. They're out there and they're generating cash. And on this topic, so what are you seeing on the financing side, particularly with rising interest rates and persisting cost inflation? Are lenders staying confident in this space?
Yes, I think so. I don't think the numbers lie. The data do show us that the deliveries of light single engine and light twin helicopters and intermediate twin helicopters are on the rise. I think a slide was presented earlier. 4 new entrants, the 09, the R88, the H140. Those 3 aircraft will serve beautifully in the Part 27 category. But what I think is happening, at least from a debt perspective, is that the stock market is returning greater returns. People are not willing to pull out their cash, even now with longer lead times, putting in a deposit of 15, 20% and waiting 2 years for the helicopter is no longer acceptable. People who don't want to pull cash out of their returns. So we have to be a little careful in looking at the ability to actually lease these aircraft. And while no large speculative orders have been placed, to my knowledge, for light single-engine aircraft, I think it will serve a very under-addressed part of the market to be able to do so. Naturally, being American, I can tell you from an American context, EMS is a single-engine market, light twins as well. Certain jurisdictions don't have the ability to actually manage a single-engine environment for safety reasons. And to that, I always argue, why are we not looking at, from a leasing and debt perspective, is single engine so bad, or light twin so bad? I've always believed and looked at the data. If you look at the data very carefully, the failure rates on single engine aircraft are about the same as the failure rates on tail rotors, but you don't see us flying around with twin tail rotors. So psychologically, we have to be very careful in the market we're addressing and really work closely with the operator to be sustainable for their business, not just our own.
Yeah, and do you think smaller operators are managing better in this environment because they're more hands-on, closer to their assets, and because they're closer to their balance sheets?
Yes, they are. Very large operators around the world, truly, it's a job. Right? Let's be honest about that. If we are working for a large operator, a large organization, it's a bit like riding on a high-speed train. Are you going 100 miles an hour, or is the train going 100 miles an hour, you're just sitting still? When you are an owner-operator, when you are working the numbers, when you're truly going hand to mouth and arguing for every basis point of debt or equity that you're getting for your light single-engine helicopter, it's personal. And it makes a difference to the lives of the people involved, everyone in that business. So yes, I think it's more personal, I think it's more careful, and the ability to repay debt or a lease or to service a loan is of primary importance for them to continue their livelihoods.
And when we talk about the financing relationship, and when it comes to helicopters, usually in the range of the under 10 million or so, how important is the personal connection between the financier and the operator?
The personal connection is as important as when you're buying your first home, as it is when you're buying your first helicopter. It is the biggest, most important decision for your family, for yourself, and the future life that you're trying to build. That relationship is what makes, I think, leasing an innovative, or hopefully in the future, an innovative platform. Having OEM experience, to give you some context, if you were based in North Texas and were contacted by a sales manager to sell you a helicopter, and the sales manager shows up at the door and he has a business card that looks as if he lives in Singapore, China, Australia, you would immediately dismiss that person. Why is that person not living in my jurisdiction, speak my language, have my area code? Or a service facility to service your helicopter. But yet we have the audacity to fly halfway across the world with a foreign business card and show up in a foreign jurisdiction and say, we're here to service your local needs. So I think there's a gap to be filled. That personal relationship has to also exist on the leasing side. And we have to become less transactionally focused and more customer focused. And I think that's a very important thing. Some people have investors as customers. Some people have financiers as customers. It is important for leasing to, once again, have helicopter operators and helicopter asset owners as customers.
Yeah, that's right. I mean, that's, I think, where the trust becomes like a form of currency. Banks and financiers are not just backing the metal and the machines, they're backing the people behind it. On that, also in the recent years we have seen like a shift in the dynamics in the model preferences coming from the newer helicopters coming into the market and some of the older generations, such as the older MD helicopters or the Bell 206, for example, they're becoming out of favor. From your view, how operators are adopting to these changes in the market, and are they becoming more strategic in their asset selection and the life cycle planning?
Yeah, it's important to understand that you can make the greatest helicopter in the world, but if there's no one there to fund it for you, it's really not going to take off. The Bell 206, I believe 6,000 of them were made over the course of 40 or 50 years, has seen incredible growth and has started the short light single market. And from there, people have learned to fly, people have learned to operate helicopters. And the focus there for banks and lending institutions was to enable an organic and unorganic growth of helicopter operations. We have to once again reimagine that. So at the operator level, when you're looking for a strategy to replace that level of aircraft, of course, there seems to be a bit of a crowded field at the moment of a short light single, a long light single aircraft, and many incredible platforms out there. So again, having effective, reliable, strong capital to build a base of helicopter operations is key.
Yeah, I mean, they have to. That's the thing with the market. And with that point, move to our next slide. So in this slide, we're looking at the IBA value outlook. Just quickly to explain it, technical side. So this chart looks more on the market to base ratios. Market value in general, market to base value ratio, sorry. And market value, usually that's your short-term value outlook of a helicopter pricing within 12 months. Your base value, that's your the value of the helicopter of its life, and it's more of a longer term we're talking in the 5+ years. And whenever you see the market values are trending above what their base value should be, this gives a strong signal. Tell us that the market is resilient, and despite external pressure from the inflation and all the interest rate, supply chain constraints. And so on this one, do you see these conditions actually creating opportunities, especially for buyers that can move quickly?
Looking at residual value over the last 5 years, or even the last 10 years, it's evident that single-engine aircraft have always, if not maintained, original purchase prices, even accounting for inflation, maybe have exceeded those. So the data has always shown that. Taking advantage of it is something that we, I think, have done generally poorly. So if we're looking at residual value of light single-engine helicopters or light twins, they continue to exceed expectations, yet the bottom end of the market, when I say the bottom end, looking at the curve that you're looking at on the screen, even though it's the top end of the asset class, it truly has not seen the kind of value retention from a percentage basis that the light single engine and the light twin engine helicopters have. So why do we as an industry do that? Each one of us has their own reasons. Financiers don't want to work on quantums that are so small. Equity providers want to make a greater dollar return and rather not do it transaction by transaction. But again, residual value movement will continue. I think that dip at the bottom for the heavy was the S92 correction, but otherwise, I think that too will continue to rise and meet the rest of the players to the top end of the residual value curve. But again, the stability is what we continue to see in the bottom end of the asset class. And I think we as an industry have to take that responsibility to grow that. Every OEM has a step-up strategy. Very few new entrants to the market come in with aggressive purchases at the top end of the asset class for an OEM. They want to start small, they want to understand helicopters, they want to compete with a smaller contract, take less risk, and then grow from there. So we have to take an organizational and an institutional view to grow it from a step-up strategy into the upper asset classes.
Yeah, I mean, that's true. I mean, we tend to see this market as becoming more disciplined with deliberate growth. Especially in the light helicopter, the deal might not be grabbing headlines anytime soon, but they're real and they are reoccurring. And on this being said, Samir, thank you very much for the information and the wonderful discussion with you this afternoon. And before closing, just any questions?
We might be out of time. Thank you, Rami. Thank you for your time, and thank you for the questions.
Yeah, thank you. Can I just ask a question whilst we have you here? I was wondering, to what extent do you both feel that the finance market for smaller scale assets is underserved?
So the reasons why and the levels to which they're underserved do vary from market to market. Having local capital to buy a single engine or lighter helicopter can be challenged simply by what else you have to pledge to get the kind of debt you want to get to buy a helicopter, your farm, your house, your car. What we need is truly asset-based, asset collateralized debt availability. And to be a global lessor means serving that too and sourcing debt for those markets.
Yeah. Rami?
Yeah, I mean, I totally agree. I mean, like the helicopters, especially the light helicopters, they tend to be more on the lower side of the values, which sometimes find it difficult for some of the financiers to find that capex investment into these assets. However, there is that your growth and the scale of economy, like in this helicopter. So the more you would be working in this, the more you will see returns.
Yeah. And where do you feel, Samir, is the biggest potential geography for financing small-scale assets?
I like Asia Pacific because I think 60% of the planet live there. It's complicated, it's challenging, unlike Europe, which has one regulator and mostly one currency, or unlike South America, where there are two languages, or unlike North America, where there's really a lot of alignment. Asia Pacific is diverse, country to country, culture to culture, and I think if we go local, work on EMS programs, work on search and rescues, those communities need our help too. So I think the biggest growth, and the most exciting growth, will be in Asia.
Yeah, and presumably that's linked also to the region's growth potential as well and accumulating wealth.
Yes. As we saw earlier, we're talking about 30% of the 7,000 helicopters we expect to deliver over the next 10 years to fall into those territories.
And does that apply across the range of applications, so EMS and...
Yes. The ability for a nation to manage an EMS program really depends on the government, but also depends on insurance companies and hospitals and really infrastructure to support it, none of which really exists in non-OECD countries today, like India, like China, and others. So that is a responsibility I think each one of us should have, and it should be across those segments for the para-public side of growth.
And just finally, very finally, just a quick question on how financing for smaller packages looks by 2030. Significantly different from the way it is now?
I think it's going to be different, but that's probably going to be because of everybody in this room, or I would believe it has to be, because we're the ones controlling the purse strings in many ways, and the discussion and the debate. It has to start with us and end with us. So the next 5 years, we'll see if we can meet that objective.
Rami, give us a guide to the next 5 years in smaller scale financing.
I mean, we're starting to see more helicopters coming into the market with multi-role configurations. So we're seeing helicopters that are able to conduct EMS missions, and they can also do search and rescue, utilitarian, and even passenger transport. So we're seeing more coming into this market of these highly convertible and easily to operate in different environment quite easily. So we're likely to see these helicopters becoming more common and becoming more delivered in the market.
Yeah, okay. So Rami, Abdel, Aziz, IBA, thank you for moderating this session, and Samir Rehman from Aerius Leasing, thank you for your answers. Thank you.